All right, so pre-market design, the gears of the market. This is pre-market design, the strategy in coordination with the fibs, and how they work. All right, so you have three different things. You have premium,
Mm-hmm.
you have discount, and you have auction price. These are just the three simple structures that make everything move. Understand that premium, we identify that as red when it comes to marking out our fibs, because you got to see it. So premium is always above you. Those are where sellers are. Discount is always below you. Those are where buyers are. The further up you go in price, the stronger the buyers get, but the more they enter sellers territory. And the further down you go in price, the stronger the sellers get, but the more they enter buyers territory. Cool. Now, auction is the fairgrounds, everything in between. Buyers nor sellers have control, right? This is your directional compass. This is your direction model. This is everything that's showing you where and when the buyers start to take control and how to use that to your advantage. Now, the Fibonacci engagement framework, you only have about four levels. You have your 786, your 618, your 382, and your 236. I don't use the Fibonacci as the same way as everyone uses the Fibonacci as the golden ratio of the 618 and 786. That's the golden ratio retracement. No. These are just my entry levels. These are my entry points. Okay. And I take trades with the 50% midline. What does that look like? That looks like this. So this is the goal. This is NQ right now. So if I go to NQ, there's certain levels that you see. You
Mm-hmm.
see 786,
Mm-hmm.
618. That's the trade we took today. The 382 and the 236. And then the spaces in between at the 50% here and here. Okay.
Mm-hmm.
Same thing with gold. Um, why is it glitching? Okay. Same thing with gold. 786. You know what I'm saying? 50%, 50%. We don't really take trades at the 50% of the auction, but 50%, 50%. And the spaces in between. Direction model, obviously we will have these red, black, and green, but I don't have them color coordinated right now. Cool.
Yeah.
So that's the fibs. Let's go back to the file. So those are the levels we take our trades on. It says you're not calculating the market, you're aligning with it. And the reason I say that is because when we're looking at the fibs, we take the trades in the direction price is going. In We take the trades in the direction of the trend at the fib levels. So we can either take a breakout of the 786 or the retest of the 786. We can either take the breakout of the 618 or the retest of the 618. Mind you, we're on the 5 hour. I take trades on the 15-minute.
Mm-hmm.
So 618, boom. 618, boom. 618 breakout back to the downside, boom. 618 to the downside, boom. You know what I'm saying? 786, boom. And then I haven't really came out with the order flow model yet, but the order flow model allows you to draw the fib in between the fib with the spaces in between and
Mm-hmm.
take trades like this as well. So you'll be getting entries like this, but it's really crazy, honestly. It get wicked. I'm not gonna
Yeah.
lie. But
If
outside of that, these are the levels we take our trades on. Why is it so good? Because I say it all the time, and I'm kind of tired of saying it, but a lot of traders have a good entry model, but not a good direction model. This is your
Mm-hmm.
directional compass incorporated with your entry points, your entry models, where you're taking your trades at. And then like when you have support and resistance or strong levels, strong pivot levels, you can mark up like those ranges like this and
Mm-hmm.
understand like, okay, bet I'm looking for a reaction at this level. Even though price still came down to here, no problem. It's
Mm-hmm.
just it's just to help you with direction, okay?
Yes.
So now, the NQ application, the macro rhythm. How do we actually draw out our fibs? When it comes to drawing out our fibs, for NQ and gold are two specific ways. I only have them for NQ and gold because those are the only two things I'm trading. It's the
Mm-hmm.
same thing for S&P 500 and MES and stuff, but and really anything. But this is how I do it for NQ. You want to start your fib from the weekly chart. It says for NQ Nasdaq futures, begin with the weekly time frame to understand the macro rhythm. This is where the market reveals its long-term directional intent. Facts. It says the weekly chart holds the truth of momentum. Here you build your foundation, the structural layers upon with layers upon which all execution exists. I say exist. Execution rests. Cool.
Mm-hmm.
So it may seem like damn, you starting your fib from the week, but yeah, because with the fibs it's a little different on here. We started from the week, then
Mm-hmm.
we got a second fib in between. So let's get into that. Just to recap. NQ building the equilibrium direction model. It says the equilibrium direction model is a two-step Fibonacci overlay system that reveals the active trading range within the larger structure. Your first Fibonacci, you started from your swing low to your highest point if the trend is bullish. If the trend is bearish, you started from your highest point to your lowest point. Okay.
Yeah.
Then draw your second Fibonacci from the 0 to the 236 if it's bullish, or from the 0 to the 786 if it's bearish. How does that look? Like this. You draw a second fib right here. So if you see this fib from 0 to the 236. So it's from the 0 point right here down to here. Boom. To the 236. Cool. Bet. And if it's bearish, it'll be from the 0 to the 786. Anyway, um, get back into it. It says execute with equilibrium. You take trades at the 786, 618, 382, and 236, and the midline zones inside that equilibrium. This is where precision meets flow. And that's why I call the other way that I trade the model kind of like the order flow model, because that's what it is. Because within the spaces in between,
Mm-hmm.
you're able to draw out another Fibonacci, because the Fibonacci is based on a macro Fibonacci, which is based on a macro range. The equilibrium of that range should always be respected with anything in between, meaning that these levels are not random.
Yes.
Boom. So stuff like that. Anyway,
Okay.
let's come back to here. So it says gold application, tracking range and flow. It says for gold, XAU, USD, or futures, the principle remains the same, but the time frame and structure shift. Gold requires adaptive range recognition. This is from Romel and his Holy Grail. This is his strategy, Holy Grail. And I had to incorporate the Holy Grail, he had to incorporate the Holy Grail
Mm-hmm.
with the fibs, however you want to put it, to have an effective way of trading gold. And just in general, it's a new perspective because everything is ranges. The way I draw out my weekly, that's the entire range. But Ramel has it to where you're drawing ranges inside of ranges, and this is how we do it. I'm not going to teach his part of it because that's
Mm-hmm.
not my strat, but I'm going to teach my perspective, or just from the fibs. It says track your highs and lows to identify the current trading range. Once you've identified the range, let that trend determine your Fibonacci direction. If the market is flowing upward, draw your fib from bottom to top. If the market is flowing downward, draw your fib from top to bottom. Use the 1 hour time frame to structure your fib and the 15-minute or 5-minute chart for entry confirmation. It says no second Fibonacci is needed. The step one and step two principles still apply, meaning premium, discount, and auction. Define your direction at the 786, 618, 382, and 236, and the midline to define engagement. Engagement means your entries.
Mm-hmm.
Now, Uh, just to clarify, let's look at gold just to show you that. Boom. On gold, mind you, it doesn't look the same. As you see, if I go to the weekly, you're not
Mm-hmm.
gonna see. Damn, why is it loading? Whatever. I'm gonna go to the. I have no other fib drawn out. This is the
Yeah.
11th hour. I have no other fib though. But if I go to the hour, you'll. What's the point of this? Hmm.
Stripping.
Whatever. But if I do it from here, I track my highs and lows, and I'm able to determine what range we're trading in. We were
Mm-hmm.
previously trading inside of this range, so we are previously inside of this range from this swing high to this swing low,
Yes.
and meaning that this is our external range, and this is our even more external range, but our internal range right now is from here to here. So until we break out of this, boom. So boom, until we broke out of it, we now have a new range. What is
Mm-hmm.
that new range? From here to here. Boom, boom. And you just trade accordingly.
Mm-hmm.
And you get to where you are now at price. And my stuff is glitching. I don't know why. Whatever. Okay. Anyway, the discipline of no perspective. Trading with no perspective. We do not decide direction. We do not trade with a bias. We do
Mm-hmm.
not chase or avoid anything. It says the trend decides, we observe, it says, anyway, let me start over. It says the trend decides, we are observers of the truth, not creators of it. The market moves according to its own rhythm, we simply align.
Mm-hmm.
We trade through the lenses of no perspective, only truth. Bias is the enemy of clarity. Objectivity is the foundation of execution. We do not chase wins. We do not avoid losses. We move as one with the market, neither ahead nor behind, but synchronize with its flow. Pretty much at the end of the day, be in sync with the market. Don't try to force anything. Don't try to win. Don't try to lose. Obviously, not trying to lose, but don't try to win. Don't avoid losing. Don't try to make more money. Don't try to not make more money. Just stay disciplined, consistent, and continue to execute, right?
Mm-hmm.
Now, when it comes to that, um, you have something called psychology, which is difficult because, that's the mind and that it fucks with you. One way to indirectly stop all of that is risk management. Making your trading rules your risk management rules. When you make your trading rules your actual risk management rules, kid you not, psychology isn't even there because when you say, okay, don't overtrade or stick to only two trades, blah, 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 blah.
Mm-hmm.
That is an emotional, you're still emotionally connected to that because you know the root of it, you know why you're saying it. But instead, you're like, okay, risk $180 per trade. That's how much you're doing. You're literally risking $180 per trade. You're not telling yourself to not do nothing. You're not telling yourself to do something. You're just saying risk $180 per trade, targeting a 1 to 3, taking two trades per day, blah, 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 blah. What else? So forth and so on. When you do that, psychology becomes non-existent.
Mm-hmm.
So it says the mechanical trader's creed. We are mechanical traders, and these are the gears of pre-market design. Structure, premium, discount, and auction. Says from the unchanging architecture of every market move. That's just the core foundation. Direction. The trend reveals itself through price action. We observe and align, never predict or force. Engagement. Fibonacci levels provide precise entry zones where probability and structure converge. Fourth, rhythm. Time frame. Time frames work together. Macro defines context and micro defines execution timing. When you incorporate all of these four things, you should have no reason why you're unprofitable unless it's just your mindset. But outside of the mindset, if you know how to incorporate proper risk management, let me see. I show the same thing all the time, over and over and over.
Mm-hmm.
That's all you need. That's all you need right here. I'm not even gonna get all the way into it, but this is all you need. Baseline growth mastery.
Mm-hmm.
Worst case scenario, bare minimum. If you can execute this, then you're good.
Okay.
Anyway, let's get back into it. And then the last part is just the visual language of truth. Red, premium, green, uh, opportunity. You know, pretty much red indicates loss of opportunity. Stop. Don't do anymore. Green means giving plentiful opportunity. More. Go. Black is just like okay, nothing. So we always have that on our chart just so emotionally we stay connected.
Mm-hmm.
Um now I don't know why my stuff is acting like this. It's kind of annoying. And now it's acting slow. Maybe because let me close all these. I don't know. Anyway, so yeah, that's about that. And let me end this here.